What's going on? Gen Z Guy here, and in this video we'll be discussing the different types of businesses that exist so you can figure out which one is right for you. Understanding the different types of businesses is important, especially if you're an entrepreneur or planning to start your own business in the near future. You may be wondering what exactly are the different business types, and how do I know which one is right for me? Well, this video can serve as a guide as I break down what each business type is and then do a deep dive on the different advantages and disadvantages of each type, so that you know which one can provide you exactly what you need. Now let's get into it. First on our list is a sole proprietorship. A sole proprietorship is a business that is owned and operated by one individual. It's the simplest and most common form of business organization. In this type of business, the owner is personally responsible for all the business debts and liabilities. They also have complete control over the business and its operation. Next up, we have partnerships. A partnership is a business that is owned by two or more individuals. In this type of business, the partners share the profits and losses of the business. The partners also share the responsibility for the business's debts and liability. Coming in at third on our list is a limited liability company, or an LLC. An LLC is a hybrid business structure that combines the flexibility of a partnership with the limited liability of a corporation. In this type of business, the owners are called members, and they are not personally liable for the company's debts and liability. Finally, both the fourth and fifth business types that we're going to discuss are different types of corporations. So for our breakdown of the 5 types, I'll refer to them both as corporations. However, for our deep dive of each type of business, I will refer to them as either a C Corp or an S Corp, representing a small corporation, aka the S Corp, and a corporation as I call the C Corp. With that out of the way, what is a corporation in and of itself? Well, a corporation is a legal entity that is separate from its owners. It has its own rights and liabilities. The shareholders of a corporation are the owners, and they are not personally responsible for the company's debts and liabilities. Also, on top of this, S corporation shareholders are referred to as members. Now that we've covered the 5 types of businesses, let's take a deep dive into each one. First off, sole proprietorship. A sole proprietorship is a great option for individuals who want to start a business on their own. It's the simplest and most common form of business organization with no paperwork involved. There's no agreement required to begin either. Some of the other advantages of a sole proprietorship include that it's easy and inexpensive to set up due to the lack of paperwork and agreements, complete control over the business as you're the only person who's running the business, all profits belong to you, again, because you're the only one involved. Taxes are also a good benefit because they pass through, which makes this simple and straightforward since they flow directly into your personal taxes and you won't have to file any separate tax forms. However, there are some disadvantages to a sole proprietorship, including the owner is personally liable for all of the business's debts and liabilities, there's limited access to financing, limited growth potential, and of course the biggest risk of them all is that in a sole proprietorship, if legal action is taken against the business, they can come directly for your personal assets. Now, on a less gloomy note, we have a partnership. A partnership is a great option for individuals who want to start a business with someone else. Some of the advantages of a partnership include more resources, ideas, and expertise, since there's more than one person involved, and you can bounce ideas off each other. Shared risks and responsibilities, which means not everything is on you. Access to more financing options, since having somebody else there makes it a little less risky for somebody to invest in your business. And they're easy and inexpensive to set up, since all you really need is a signed agreement for the partnership. However, there are some disadvantages to a partnership, which include the following. Partners are personally liable for all the business's debts and liabilities. There's potential for disputes between partners, and there's limited growth potential. Another issue with partnerships is that one partner can go out behind the other partner's back and make an agreement without the other partner knowing, and the partner who didn't know is now fully responsible for the actions and decisions of the other partner. So when forming a partnership, be smart when choosing who you're going to go into business with. Coming in at number 3 is our limited liability company, also known as an LLC. An LLC is a great option for individuals who want the flexibility of a partnership with the limited liability of a corporation, which means that when legal action is taken, people can't come after your personal assets, but rather they can only go after the assets of the business. Some other advantages of an LLC include flexible management structure, no limit on the number of members, and pass-through taxation, just as with a partnership and a sole proprietorship. However, there are some disadvantages that come along with forming an LLC, including They're more expensive to set up than a sole proprietorship or a partnership. There's complex regulations and paperwork, which can be handled by a local professional. So if you're looking to start an LLC, make sure you reach out to somebody in your area who understands the complexity and the issues involved when forming an LLC. Also, there's limited growth potential in comparison to the next two that we'll get into, which are S Corp and our C Corp. Coming in on our list at number 4 is a corporation, which is a great option for individuals who want to separate their personal assets from their business assets. Some of the advantages of a corporation include limited liability for the shareholders, access to more financing options since you can issue stock, more growth potential as there's always room to improve, and easier access to financing when forming a corporation. However, there are some disadvantages to a corporation, including they are more expensive and complex to set up since you have to file articles of incorporation within a state. There are strict regulations and paperwork, and there's also double taxation. Now, these basic descriptions are great to gain an understanding of what corporations are, but let's dive further into both C corporations and S corporations, also known as C Corps and S Corps, and their unique distinctions between each other. For a distinction between C Corps and S Corps, there are 4 main differences I want to highlight for us, which are taxation, ownership, management structure, and legal formalities. When discussing taxation, one of the primary differences between S Corps and C Corps is how they are taxed. C corporations are subject to double taxation, where the company is taxed on its profits and then the shareholders are taxed on dividends they receive. On the other hand, S corporations are pass-through entities, meaning they are not subject to corporate income tax. Instead, the profits and losses of the S Corp are passed through to the shareholders, who report them on their individual tax returns. Number 2 for our differences is ownership. There are restrictions that apply to S Corps that aren't applicable for C Corps. S Corps are limited to no more than 100 shareholders, all of whom must be U.S. citizens or residents. In contrast, C Corps can have an unlimited number of shareholders and can be owned by individuals, corporations, and other entities. Coming in at number 3 is the management structure of a corporation. The management structure of a C Corp is a much more rigid management structure that includes a board of directors that oversees the company's operations and makes important decisions. S Corps, on the other hand, have much more flexibility in their management structure and can be owned and managed by the same individuals. Finally, coming in at number 4 for our differences between S Corps and C Corps is formality. A formality difference between C Corps and S Corps is that C Corps have more formalities that must be followed, such as regular board meetings and keeping detailed records. S Corps have fewer formalities and are generally much easier to maintain. So if you're interested in starting a business, make sure to consider the differences between all the business types and which one is best for you. Also be sure to consult with a local professional in your area. Thank you for watching, and I hope you found this video helpful. Don't forget to hit that like button, subscribe, and comment down below for more financial tips and advice. Take care, and I'll see you in the next one.
Never break, always fight, never quit, do it right, play the game, win it life, have no shame, there's no time, feel the pain, live the grind, I could change, in my mind, pick a lane, commit and climb, the only way.